We've seen over the last 3 years how foreign central banks have been buying loads of gold, record amounts of gold, since the beginning of the Bretton Woods, let's say, regime in 1944. It's been the biggest 3 years of net gold buying. So gold is still very important. Well, gold is money. And that's why this is so significant. And it goes to the heart of the gold manipulation, of which I've been talking about for years as well. I have a gold manipulation playlist if you want to look into it. I'm not going to go too much into it right now. I think the bullion banks are concerned because they probably know something that we don't about that gold in Fort Knox, that it might have been leased to the Bank of England, and the Bank of England might have leased it many times over. Is it any wonder a lot of gold is going from London to the US? But there's also gold going from elsewhere to the US. So maybe finally the US administration is realizing that gold is really important, and it's been flowing east for too long, and we need to repatriate it. And yeah, so let's listen to President Trump here talk about Fort Knox, and I think it was last night. And it's quite amazing how X gets things out there, because last week it was Zero Hedge who tagged Elon Musk on one of the stories. Why aren't you Doge look into Fort Knox, do an audit? And Elon Musk said, well, yeah, that's a good idea, but I thought they did that annually. I don't know if he was being sarcastic or if he's just doesn't know much about gold. But now word has gotten to President Trump. So listen to this.
We're going to go into Fort Knox to make sure the gold is there.
Are they going to?
You know that we're going to go into Fort Knox. You know about that?
And the reason I want you to listen to this is, yeah, because we're never too sure. People say, oh, they're going to audit Fort Knox. And people think, oh, they're like exaggerating. But it's for real. For those of you who are not aware of what's going on in terms of the squeeze in gold right now, well, the bullion banks, the central banks, the BIS, they use a lot of this gold to lease the physical gold, to lease it out many times over. It's just like a fractional reserve banking. If you put a paper dollar in your account, they will lend it as many times as they want. Usually it used to be 9 or 10 times. But since 2020, the Federal Reserve they abolished all reserve requirements. It's zero. I would venture to say that in London, where the London Bullion Market Association is based and the bullion banks operate from, there is no limit to how much paper gold or unallocated gold they can create from, let's say, a 400-ounce bar. It's infinite.
Let's be perfectly honest about what's happening, because it's all there for those who have eyes to see. Over the last 3 years, foreign central banks have embarked on the largest gold buying spree since the Bretton Woods Agreement of 1944. That's not speculation, that's a documented fact. Yet the average person on the street has no idea this is going on. The media, of course, doesn't bother to cover it in any meaningful way. It's almost as if they've been told to avoid it. And what's even more fascinating is how the most powerful financial institutions in the world are rearranging their portfolios quietly, in full view of those who know how to read the signals. The repatriation of gold, the accumulation of physical reserves, the quiet de-dollarization efforts. It's all pointing to something very big on the horizon. And where is the public in all this? Sleepwalking, mesmerized by tech stocks, Bitcoin, and the illusion of fiat prosperity. They've forgotten that gold is money. Not an investment, not a speculation, but money, real money. And that's why the moves being made by central banks and institutional actors are so important. These are not entities that operate on emotion or hype. They operate on long-term strategic necessity. When they hoard gold, it's not because they think it's going up 10%. It's because they know something is structurally wrong with the global financial system. They know that the next monetary system will be anchored to something real, something with no counterparty risk, and that something is gold. Now, when I hear talk of Fort Knox and the idea that the gold there might be rehypothecated, it doesn't surprise me. In fact, I'd be shocked if it weren't. We've had decades of unaccountable gold leasing through opaque systems, particularly via the London Bullion Market Association. The entire system has operated like a fractional reserve gold bank, leveraged to the hilt, creating claims on the same bars dozens of times over. You can't have trillions in derivatives tied to a finite physical asset without eventually reaching a breaking point. And when the President of the United States starts publicly saying, "We're going into Fort Knox to make sure the gold is there," that tells you something has changed. That's not political theater. That's an admission of uncertainty, because you only audit something if there's a reason to doubt it. I think what we're witnessing right now is the beginning of the end for the paper gold system. The phased transition, as I've said before, from a synthetic pricing mechanism to a physical settlement mechanism. The gold market has been controlled for decades by a handful of powerful bullion banks, central banks, and global institutions that have been able to suppress the price through unallocated positions and synthetic contracts. But now physical demand is rising. Central banks are draining COMEX and London vaults. Gold is flowing east, and the Western financial elite are starting to realize that they've lost control. The London gold market in particular has functioned like the Wild West. There's virtually no limit on how much unallocated paper gold can be issued against the same physical bar. This is why so much of the pricing structure has been artificial. The ability to flood the market with phantom ounces to suppress price has been the status quo for decades. But you can only suppress the true value of something so long before reality reasserts itself. And now, as confidence in fiat erodes globally, amid rising inflation, sovereign debt crises, and geopolitical tension, gold is being viewed once again for what it truly is: a store of value, a financial lifeboat, and a weapon of monetary war. What's happening behind the scenes is akin to a silent run on the gold market. We don't see the panic yet because the pricing mechanisms haven't fully shifted. But when a central bank or sovereign wealth fund demands delivery rather than rollover, when they say we want the bars, not a certificate, it sends shockwaves through the system. That's what's going on now. The move from paper to physical is accelerating, and the supply of real metal is not infinite. That's when things get dangerous. That's when prices become disorderly, and that's when governments panic. Consider for a moment why countries like Germany, Austria, Hungary, Turkey, and Poland have been repatriating gold from New York and London. Is it simply about location? No, it's about control. It's about sovereignty. It's about not trusting the custodians of yesterday. The United States itself seems to be quietly bringing more gold home, supposedly under the guise of tariffs or trade imbalance adjustments. But we know better. This is about strategic positioning before the global financial architecture is restructured. Now, if gold really has been leased multiple times over, as many suspect, it creates a major problem. Because the only way to fix that is to either default on delivery or buy back those leased bars at much higher prices. That would trigger a short squeeze of historic proportions. Gold would reprice not incrementally, but violently. A reset would become inevitable. And that, I believe, is exactly where we're heading. Whether it's intentional or forced by market reality, we're going to see a revaluation. And this time, it won't be based on spreadsheets or committee meetings. It will be based on weight, purity, and delivery. If gold was still $35 an ounce in 1971, and we're near $3,000 today, that's not gold going up. That's paper going down. It's the dollar that has collapsed in purchasing power, not gold that's suddenly more valuable. And people don't understand that because they don't think in those terms. They think of gold like a tech stock. They're missing the entire point. You don't sell gold at $3,000 thinking it's topped out. You hold gold because it protects you when everything else fails. You hold it because it is the final claim on value in a world of over-leveraged promises.
But when you have the President of the United States saying he wants an audit of Fort Knox, and gold might still be there, but if that gold has been leased out, rehypothecated many times over, that's a problem. How do you solve that? Well, you have to buy the lease back, you have to buy the gold back, and the thing is, If you lease it 100 times the gold that you have, it's going to drive the price massively higher. It's like a run on the bank. My speculation is that a lot of the gold, unfortunately, has gone offshore because in New York, the rehypothecation of the gold is not as extreme as in London. There's no limit in London. It's like the Wild West of bullion dealing. Let's say you boil water, the water becomes gas, and the gas dissipates. That's the phase transition. And it creates a lot of energy as well because you input the energy. And I think the same thing is happening in gold. And the system that we're seeing being changed is this bullion bank paper fractional reserve system. And what's making it change is this fact that the United States wants to know where the gold is. The United States might be wanting to bring the physical gold back. It disrupts the whole paper game in the LBMA. They won't be able to hypothecate anymore and control the price. They're not going to be able to create a infinite supply of paper gold, which keeps the price lower. And I said here in this chart, phase transition from paper to physical or real gold, question mark. I think that question mark could be removed very soon. And you can see how it shows up on the chart. It's really breaking out. So I think that line that we're breaking out and the other line that the price of gold was kept under since 2011, that of this system, LBMA paper system, and that's broken in my opinion. So it's interesting times. I think it was Lenin who said that sometimes it took decades for things to change, but then you get some weeks or months where decades or centuries happen, and I feel like we're in that kind of environment right now with the new administration.
If we consider what's coming next, it's not just a slow unraveling. It's more like watching an old dam with cracks finally giving way. What we are now witnessing in real time is not simply a monetary reshuffle, but a complete realignment of the global financial system with gold and silver at its core. The Western fiat experiment is aging poorly, and the credibility crisis is unfolding faster than most people can digest. The repatriation of gold, the strategic silence from mainstream media, the lack of public engagement, these aren't coincidences. They are symptoms of a controlled demolition, a reorganization, if you will, disguised as isolated technical shifts or tariff adjustments. But behind the curtain, you have a confluence of the world's most powerful institutions quietly preparing for a new paradigm. Now let's go deeper into silver, often overshadowed by gold, yet holding a dual role, monetary and industrial. Silver has remained artificially suppressed for decades, largely due to its strategic importance in industry and its historical connection to sound money. The same forces that kept gold shackled have kept silver in a dungeon, and the escape is imminent. While gold gets the headlines, it's silver that may offer the most explosive upside, not just in price, but in geopolitical leverage. Think about it. As solar, electric vehicles, and digital infrastructure advance, silver demand skyrockets. And when the monetary function kicks back in, which it will, you'll be looking at a metal with serious scarcity and massive strategic value. Yet for now, the public remains unaware. No CNN special report, no Wall Street Journal front page. Just quiet, steady accumulation by smart money. In fact, what makes this moment particularly eerie is that despite all the signs, the dollar's deterioration, the mounting debt, the collapse in real yields, the average investor is still stuck playing musical chairs with tech stocks and meme coins. The media is screaming all-time highs while central banks are screaming through their actions, get real assets. This disconnect is a gift for those paying attention. Those stacking gold and silver now are the few who will be holding something of real value when the music stops. And rest assured, it will stop. Maybe not with fireworks and sirens, but with a dull thud, bank holidays, capital controls, or a sudden technical revaluation over a weekend. That's how these transitions tend to occur, quietly, stealthily, and then all at once. Let's not forget inflation either. Central banks have created a monster they can't tame. Inflation is not going away. It's metastasized. Trillions of dollars printed, asset bubbles inflated beyond reason, supply chains broken, energy security compromised, and now we're being sold the idea that inflation is sticky, as if that term somehow softens the blow. But in truth, what's coming is not sticky inflation. It's systemic inflation. It's the final phase of fiat decay. The only real escape is to flee toward tangible value, toward the safety of metals. That's what central banks are doing. That's why the BRICS nations are racing to secure their gold. That's why silver is now being imported in record volumes into Asia. These aren't ideological moves. These are survival tactics. And what happens when the public wakes up? When they realize their savings are melting, their pensions are worthless in real terms, and that the stock market they trusted is just another branch of Wall Street's casino? The shift will be violent. The reallocation into gold and silver will not be a smooth, orderly procession. It will be a stampede. And premiums will skyrocket, not just because of demand, but because of scarcity. Think about it. With such little physical silver available, and most of it already spoken for by industry and ETFs, where is the marginal buyer going to find it? They won't. Not at a reasonable price. And that's when the true disconnect between paper and physical markets will explode into public consciousness. This is also where the psychological shift occurs. For decades, gold and silver have been treated as relics, barbarous leftovers from a bygone era. But when confidence breaks in fiat, those relics become lifeboats. And right now, the central banks are quietly building theirs, while the average investor is being distracted by Taylor Swift concerts, political circus acts, and get-rich-quick crypto schemes. But underneath the noise, the real money is already moving. Slowly, deliberately, with conviction. And when the masses catch on, it will be too late. Now imagine what happens geopolitically. If the United States revalues its gold reserves, let's say from $42.22 an ounce to $10,000 or more, the impact would be global. Not only would it re-anchor the dollar to something real, but it would also effectively wipe trillions off the debt books in one swoop. That revaluation would be a signal to the world. The rules have changed. The Fed, the Treasury, and whoever is pulling the strings behind the curtain, they know the game is up. And they know that the only way out is through gold, through revaluation, through digital ledger systems backed by tangible assets. And once the US acts, other nations will follow. It would be financial dominoes. And silver, as gold's cousin, would not be left behind. So where does this leave the average person? If you're relying on CNBC, Bloomberg, or your local bank manager for financial guidance, you'll be the last to know. By the time it becomes public knowledge that the monetary system is being restructured, the exits will be crowded and the doors locked. That's how these things play out. That's why history matters. Because if you study history, you know that trust in fiat never lasts. It never has. And every single time, gold and silver come roaring back, not as investments, but as money, real money. The best course of action? Don't wait for the media to give you permission to protect yourself. Don't wait for the next banking crisis, the next wave of inflation, or the next emergency interest rate cut. If you're waiting for a signal, this is it. The chart is screaming it. The premiums are whispering it. The central bank actions are shouting it. The only question left is whether people are paying attention. In conclusion, we're not simply entering a new cycle. We're approaching the end of a long and broken era. Gold and silver are not just poised for higher prices, they are positioned to reclaim their place as the foundation of monetary sanity. Whether that shift comes slowly and steadily, or suddenly and chaotically, is up for debate. But what is not up for debate is the fact that the shift has begun. The train is leaving the station, and the time to get on board is now, not when everyone else is rushing the platform.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.